distribution channels. The lower end of the market in South Africa is doing particularly well for us. And then the African story is coming forward to make a substantial contribution. When we conceived the idea of my way of going direct, I mean, we had the record car sales at the time, and them being in general insurance and short-term insurance, you know, you're dependent on sales and the economy to grow and being buoyant. And last year we were worried, but since then they've made a few plans, and that business is going well. On a cash flow basis, I'm very happy to report that last month we were positive in that business. They have well over 60,000 clients now on the books. So overall, it's been, you know, 25, 26 months to get to break even. But we're there, and now we're really looking forward to a good business.
Do you have a target of where that business should be in terms of overall contribution to the overall business?
Yes, up till now it's just been using capital, and but looking forward, there are very clear targets, 1 to 3 years and so. We know that direct insurance will play a bigger role, and in all likelihood in the personal line space over time, if we just follow what's been happening in Europe, in the UK and in Australia, and extrapolate that to South Africa. So we're fairly confident. But on the other hand, I mean, we're still an intermediated business. We work through advisors and brokers and so, and they've been supporting us very nicely, both on the short-term insurance side and on the life side.
No percentages at this stage?
No, I'm not trying to give percentages, but you know, we came from a standing still. We now have well over 60,000 clients on the books. We hope to be over 80,000 towards the end of the year. And then, you know, the next 3 years to double that number. That's really what we would like.
The economy has been under pressure. What are you getting out of the consumer in terms of the numbers that you're seeing, for instance, in lapses?
Yeah. Well, we see a differentiated picture. That is, at the higher end of the market, we've seen additional flows coming into the business. If we look at our private investment clients, we've had some really good flows and growth. I think that they were up about 15, 16% in the previous year. People getting confidence in getting back into equities and so. In the middle market, people are hugely pressed, and this is where people are indebted and so forth. Yet I think we were lucky. We were fairly conservative over the years. We have a good segment of the people putting their business with us. And if we look at the lapses, you would expect in tough times those lapses to go up. We were able to keep those things intact at relatively low numbers. So we're very happy with that. And at the lower end of the market, we see, you know, as long as people kept their jobs, we've had nearly 1 million job losses or so. As long as people kept their jobs, we've seen pretty good salary increases coming through, and people aren't doing too badly. But the proviso is you should keep your job. If you've lost it, you're down and out.
No, for sure. In the UK?
UK, I think we've seen from a very low base, we've seen some very good improvement. I think our numbers are up over 60% there, yeah, we see the flows coming in, and yeah, we use the tough times to change our model a bit to come with a broader offering, and it's paying off dividends now. I mean, we're a smaller player, so we've exploited those niche areas where it's difficult for the bigger players to really adapt quickly, and so that's what we've been trying we've been trying to attract clients, and so far it's been working.
Metropolitan and Momentum creating the third biggest life insurer in South Africa. How do you see yourselves competing in that space, and what sort of measures are you now taking to try and safeguard your position, obviously?
In the two spaces that they've operated in, those people, they've been pretty good. So over time they will probably become better. In the shorter term, I think there will be some internal issues as they try to get the businesses together, which provides an opportunity for us, both in terms of people, but also in terms of growing our business. So when we're trying to make the most of it, there's a big emphasis on the next 6 months, trying to extend our distribution, and not only using agents and brokers, but also through the direct channel that we've spoken about, through the affinity groups. We have a joint venture with JD now, We've started a whole range of smaller initiatives, getting with different ways of getting to the client.
Sure. Now, one of the areas where you're going to face competition, of course, is the bottom end of the market. And we do know that 4 or 5 years ago, you launched into that segment of the market through African Life. How has that strategy been? Has it worked? Are you happy with what you've been able to achieve so far?
We had a few problems initially around systems, and so we've solved those issues. But since then, we've grown the distribution tremendously, and you know, a lot of the growth that we've seen in Sanlam and in the share price over the past 2 or 3 years has come from our ability to be in that market and to grow. It is a market that is still underpenetrated. There is still some opportunity, and we started with a few products. The margins are pretty good. And we would like to do much more in that part of the market.
Yeah, and in terms of the new areas where you are going, which countries are you pinpointing now?
Yes, we've launched our business in Uganda in April. We're looking at Malawi, and then we're a whole lot of the areas where we are already. We're trying to diversify. We've added a health business. In Botswana, we started the short-term business, the general insurance business. So a whole range of things, trying to not only extend the footprint, but also trying to do more in the countries, extend our offering in the countries that we are.
Yeah. Now, when we do our size and scopes where we're trying to describe how big you guys are, we say Sanlam is the second biggest South African insurer. But if we say locally owned, we would tend to think you're bigger. In Africa, how ambitious are you? What's the target? Is it a target that would perhaps suggest that you're going to be the biggest player in African insurance?
Yes, we would like to be that. But, you know, we take a cautious approach.
What sort of time horizon?
Over the next 5 years, we're going to really spend a fair amount of time in developing our African footprint. As we've said, we're already in 5 countries. It is a recent development. We've only been there for about 4 years. It already contributes more than 10% of our bottom line. But if you just take the future, 25% of our value of new business on the life side is being written there. And in 5 years, even if we do nothing, that is what the contribution will be to our bottom line, 25%. So Africa is a major part, even if we don't do much more. So and by adding Nigeria, Malawi, deepening our relationships with health, short-term insurance, asset management, and so.
How will that strategy be implemented? Are we talking organic here? Are we talking acquisitions?
We're talking about acquisitions there that make sense, but mainly organically. The model works well where we find partners. They usually have distribution and client bases in these countries. We bring the expertise in terms of product development, the actuarial expertise, risk management, and the IT support, where we run a big unit from South Africa. We can be in most countries at very short notice, and that support and the local partner with the sort of expertise that we can bring has been a very good recipe. It's a low-cost entry, but it also one that adds value. And for us to have that local knowledge, the local partner, is absolutely critical.
In terms of numbers, would you be able to give me numbers in terms of capital outlay?
No, we're not going to spend. We've been pretty open. We have set with surplus capital, and for the next year or two, we will spend about 500 million in Africa.
You in about 10 or so African countries, you were telling me before we started the interview. How has that worked for you? I see in this set of numbers that market was under pressure, okay, also because of the rand.
Yes.
But operationally on the ground?
Operationally, it has been tough in some of the countries, particularly those resource-based countries. Others have been doing particularly well, countries like Ghana, and so we've had a particularly good year, although I don't think the economy in Kenya has been doing that well. In Zambia, we've put in new management, and they've come to the party in a big time. Botswana has been a bit more difficult. It's an economy dependent mainly on diamonds from their income. We have a very large chunk of civil servants insured with us. So there it's been tougher, but still, even with the rand, strengthening by about 10% relative to a basket of African currencies, we were able to come with positive numbers. So we're very happy with Africa. And to give you a short sort of indication, we have 4% of our investment by value in Africa. We made 12% of our profit there, but we wrote 25% of our new business there. So Africa is the future, and we would like to strengthen the footprint there. Yeah, Nigeria, our JV is now in the final processes of being launched with First Bank. We excited about that, and we really look forward to that being a major part of the future contribution.